This is 10 minutes to take you through Built Cybernetics, which is a prop tech company that is on AIM and I think could be an interesting investment opportunity for you to consider. I'm not going to read this disclaimer, but for those who aren't aware, AIM shares are high risk. We are one of the smaller companies on AIM, so we're particularly high risk. So this may not be suitable for everyone. So Built Cybernetics, we're revolutionizing the built environment by designing, delivering, and operating smart, sustainable buildings and spaces. I'm going to talk you through what that means and cover all of these topics in a whistle-stop tour of the business. So buildings have lots and lots of different systems. Things like access control, meeting room booking, CCTV, security, heating, lighting, ventilation. And those systems can now all be connected together, but they generally aren't. And if you were to link those systems, you get a building that's better to be in, a more enjoyable experience, it's better for the environment, and it's cheaper to run. So there's lots and lots of reasons to do smart buildings. It's also pretty much the law on new buildings that they need to have some level of smart in them. So a bit on us. We were the only listed architecture company. We've been on the market since 1988. We moved to AIM in 2006, and we were purely an architecture firm until my predecessor recognized that a more successful strategy would be to find something that used the architecture to grow, but was not itself architecture. So there have been 4 acquisitions. I joined with the first one, the Peter Factory Group, the system integrator that I ran, that was acquired on a 60-40 basis. And there have been 3 subsequent acquisitions. There's quite a lot. For a £5 million market cap company, there's quite a lot going on. The legacy businesses that were the core of the original public company are at the bottom. Orchid Swanky is an impressive architectural firm that built a lot of very notable buildings and has a long history. Veritech is an executive architecture firm that does the sort of later stage delivery, which is quite a solid, fast-growing, profitable business. Orchid & Hesse is a German business that pays us management fees and a dividend stream. The smart buildings businesses are Vanti and TFG. The 2 software platforms that they run are SmartCore and EcoDriver, which so SmartCore runs the systems in buildings to make them talk, to share data appropriately between landlords and tenants. And EcoDriver is the energy management platform that helps businesses to avoid wasting energy. Cutting to our financials, we just announced the year to September 2024. So revenue's grown. We're close to profitability. We had a loss in the first half, a small profit in the second half. We've taken out some costs, and we've disposed of a freehold property that we weren't using, which has vastly reduced our debts down to pretty nominal level, and trading is pretty good. The 2 highlights of the year, I suppose, one I'll come on to later, which is a share scheme where our staff buy shares, sort of indicate their confidence in the business, and the first sale of our SmartCore enterprise license. So we run it on an open source basis. It's in 2 million square feet of buildings worldwide, from Shanghai to Santa Monica, Bahrain to Birmingham. But we got our first enterprise license sale for £200,000 to a London skyscraper. So at 5 million market cap, we are very small for AIM. We want to get to 50 million as quickly as possible, and then 100. And we're going to do that through acquisitions, particularly ones that reshape the profile of what we do so that there is more recurring revenue and more software. At the moment, if in architecture, for example, if you want to do 10 times as much architecture, you need 10 times as many architects. If you want to sell 10 times as many building operating system licenses, you don't need 10 times as many developers. So there's a really nice scalability to generate shareholder returns that we're looking to deliver but the architects are still very useful because they're trusted and they're the people who help building operators to understand that they need a building operating system. At the moment, most buildings don't have them. This is the long-term history. I didn't think I could, in good conscience, stand up and say we might be an interesting investment without addressing the fact that if you look at a long-term stock chart, it isn't pretty. Floated in the exuberance of the 1980s, tanked in the early 90s recession, and apart from the property booms since, it's been very hard to make headway as an architecture business, given the cost of being listed. My business was acquired in an all-share deal at 2.55 pence a share. There were a small number of sales by outside investors in 2023, which took the price down by 2/3, because AIM is quite illiquid. Since then, we've implemented a scheme where staff have been buying shares, and as a result of that, the share price has risen, and we've brought in a number of new investors who have been backing the business. The management team is not the most diverse bunch, I have to say, but we're all people in our 40s and 50s who are all shareholders, have all bought shares in the market in the past year, and are keen to get on. The staff ownership program, there is a scheme for all of our employees, and we buy shares regularly every month, and then the senior management go further and make additional purchases. So there is, for a small AIM company, there is a reasonable amount of liquidity. Just wrapping up the current ownership, I'm the largest shareholder. These people are also our current shareholders. And if you would like to, we hope you'll consider joining us.